Well, hello, folks. I'm L.A. Little, and this is your daily TA wrap. Where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves, what happened tonight? Or actually today, and what does it tell us about the coming days? I do a show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, I will not have a show tomorrow, so programming note. It's the last day of Nowruz celebration, and I'll be attending a festival, so we'll end up taking tomorrow off as a result, so no show tomorrow night. As far as today, we had quite a reversal in these markets. Now, we've had a lot of weakness in NASDAQ, NDX, right? Today it spread to the Russell. I suspect tomorrow it's going to spread to the SPX. The Dow is down almost 100, 98.89, 16,268, 16,269 roughly. S&P's down 13, 1852 and a half. Composite 60 and 68 lower, 41.73. NDX lost 46, and we're talking about 1.5%, 2% on the Russell, 11.55 and 50 on it. Gold was down again about $9. We had silver slightly higher. Oil popped up $1, 99.62. We had the dollar flat. Bonds were up. Bonds break out. I've been talking about the bonds before, and I'd said that the only way I saw that they could break out would be if, in fact, this market started to sell off, because that huge volume high up there, I just didn't see how we were going to get over it. Well, that's in fact is what's happening. We've pushed up there. We pushed over it today. We close over it. 109.34. That top is 109.44 today. That's going to be a breakout tomorrow. And it's not just a normal breakout, folks. It's multiple swing points. You know what that means. That means you can get a fast move to the upside. That's the setup here. I don't know if it's going to do it or not, but the odds are pretty good, about 82% when that happens. Unless there's extenuating circumstances, which there aren't in this particular case. So bonds are telling us the market's in trouble. So let's go over and look at the market. Let's start with the breakdown on the Russell. The Russell is, in trouble too, doing the same thing. Breaks of multiple swing point lows. That breakout, right, projects lower prices. It projects it fast and hard, 2 to 3 bars, usually extension to the downside, and it does look like this one will extend. Now, it does have the ABCD structure, and it just completed it today, so we may see some sort of a bounce attempt tomorrow and then the push, but I wouldn't be betting on it. But that does, that is in the cards potentially here. But the reason I wouldn't bet on it is because of the rest of what we're going to look at. Where's it probably heading? It's going back into the top of this big bar. That's where they're all trying to go. The Feb 3 bar is the bar it looks like all of them are shooting for now. That's a high volume, wide price spread bar. I suspect that's where they're all going to try to get back to. That's the Russell, and that was the story today. If you were watching the Russell, you were keyed in pretty well on what was taking place. NDX, same sort of continuation stuff going on here. This low, it takes it out today. Doesn't have, it's about the same volume, but it's just continuing. Where's it going? Feb 3 bar right here. They're all trying to get back to that bar. If I look at the IXIC, the NASDAQ composite, the broader composite, not just the NDX, same sort of thing, extends down. Volume's about the same, going back to that same bar. That's where the next support level is. Then we go to the guys that just don't want to give it up. S&P 500, right? These guys have been hanging at the highs. What is this? This is since, we can go back to this price point since this bar, Feb 24, we're on March 26. That's 4 weeks roughly sideways. We've been talking about 3 little zones, right? You had a zone at the top. You had this zone in the middle that it's been playing with, right in there. And then you had the one underneath it. And they're all about equidistance. That's usually the way these things set up. Well, what does it do today? Crawls back into the top of the bottom floor, right? So you're back here now in floor number 1. You've been sitting in 2 and you didn't want to give it up. 3 was up there and you really only stayed up there just a few bars at the beginning. You tested here, gave it all up, big volume. That was the big volume expiry on options, quad witching. So today you crawl back in there, right? And believe me, it struggled right up until the end of the day before it gave it up. But it looks to me like it's about to test, and what does it have? It's got the same thing we just saw in the Russell. You got multiple swing point lows. They're not very far away. That's kind of the key area that's left. This is the only index left of significance that hasn't given it up. You got 3 out of 4. I'm not really counting the Dow because the Dow just really hasn't been that useful to track for about 4 or 5 months now. But yes, we're coming back. If you look at this on the weekly, all that's going to do is it's going to bring it right back to the top of these bars, right, when it gets down there. And then that's going to be the big test. Does it break it down or not? And so far, it looks to me like that's probably what it's going to try to do, is break it all down. So SPX, you know, it's not trying to come back to here yet. It's simply going to come back and test these bars. And if it breaks them, right, then you can get the faster move down. It depends on how it breaks them and when it breaks them. Does it break them, you know, because you always have to look at them in the context of everything else going on. And with all those others trying to get the Feb 3 bar, I'm thinking that you're probably going to see this guy get into the bottom here, maybe dilly-dally around and hold, maybe bounce a little bit more, and then finally give it all up if in fact that's what's going to happen. If we move over to the sectors and we start to take a look at the sectors here, they all started, you know, they've been, the sectors is what, you know, we talked about it last night saying, hey, the sectors are telling us that this market can try to go higher. If you actually look, let me pull up a different chart. Let me see, I think I have, yeah, let's pull up this chart, because here we can look at, I'm going to put it on the SPX, and I'm going to put it on the last, say, 10 days. And then I'm going to put it on, like, say, 60 minutes to clean it up a little bit. And each of these days, if we go back 4 days here, right, and I'm going to draw them out for you and kind of show you. The last 4 days, we've gapped up. We gapped up here. We actually gapped up here off of that previous close there. Sold off right away. We gapped up again. Well, actually, that wasn't a gap up. That was about a even open, sold down, and then back up. Then we gapped up again today. So three actual gaps and an even one. And every day after the move, right, it was a sell down. Every one of them. And today it just sold down all day long. So you can see that each day, and actually you can go back even farther, you had a slight gap up back here on this one, right, compared to where it closed. I mean, we've been seeing this multiple times on the way back, where it gaps up the next day, you know, day after day, and it's been selling off. Now, back here, when you got the gaps, right, you got the move continued, right? Then here you started selling off, so you had 4 out of 5 sell-offs after a gap open. That's not healthy. Usually you want the end of the day to end up, you know, not down. That says there's buying pressure. Supposedly the smart money buys the end of the day, not the beginning. And so, you know, that sort of a situation, yeah, it looks different, right? Because if you go back farther, you know, you'll see that, in fact, it's been the other way around. Well, they're selling them off today. They started giving it up finally in the sector. So, yeah, they did push higher, which we thought, but they didn't hold it. And now that they're starting to give it up, they're starting to give it up big, and they're giving it up almost all over the place. So we got a big reversal. We got big reversals everywhere today. IYT breaks out of the higher range. And I'm not going to go through all of them here, but the XLB did the same. There's some of them that are range bound, but big reversals and look like they're going to give it up tomorrow. XLI is one of them. XLK is another one. You know, you've actually got one of them that just finished. Remember, the XLY broke on multiple swing point lows. Back here, you got the 3-bar extension already. So this one, and it's also finished up an ABCD structure. So that one's probably going to wallow around here now, and then probably set up another ABCD structure to go lower. And then you got a few that are still range bound that are still holding in there, like the XLE. Oil keeps going up for whatever reason. The XLE's hanging in there. The XLF came back on a big reversal, although it's still in this higher range. So sectors don't look horrible, but they're starting to break down as well. If we go overseas and take a look at what's happening over there, what we're going to see there is also not a mirror image of here, but you're starting to see some situations here where they're running out of juice. And I'm going to go to the strong ones in Europe first. So Europe, we've got an ABCD structure on Europe. Let's draw it in. So we had it starting here. This is the CAX, right? And the CAX hasn't quite finished that ABCD structure, and given what's happened here today, I'm guessing it's not going to. Pushes up, it's got no volume, going into a little resistance zone here, kind of gets stymied there. It's not a big one, but it looks like it's, just because of what's happening here, this one's at least going to pull back into what will be supported here tomorrow. For whatever reason, and maybe it's the London being closer to the metals markets, but the FTSE had huge volume today, big reversal, and ends up where it was yesterday. That looks like usually if you're going into something, it's good news that you push it with volume, but there was nothing here but resistance. So that to me looks like bad news instead of good. The German DAX, like the CAX, weak volume push up, hasn't got to that higher range where the resistance is, and I suspect now with what happened today, this one also will likely not finish ABCD structures to the upside. Now, one thing I haven't done that I've been curious about, because that would get it up to here, is when you fall short, is that some sort of a signal or not? And I don't have any data to tell me that, and I honestly don't know. It's just something I was thinking about today. It's like, is there a clue in ABCD structures which fell to finish off? Because if you remember, we failed to finish off. And we go back to the GSPC here, the S&P 500. We never did finish off those large ABCD structures that were in place from here. Remember these structures? They projected quite a bit higher, right? We fell far short of it and never ever was able to recover and get back up there. And it looks like now we're going to come back the other way. That was true not just here, but it was true on the Russell, it was true on the NASDAQ, it was true on the NDX. They all fell short. And now we're starting to see sell-offs, right? We're actually seeing, if we go back, and I haven't been talking about this, but they're happening, is we're actually starting to see ABCD structures to the downside, right? So you got another one here that was on an NDX, and that one measures here to there. 1, 2, yeah. And back down. That one finished right on this bar, and now didn't quite get an ABCD structure yet. So this one is wherever this one goes to, and then you would have the bounce. But you know, they don't finish the upside, and then all of a sudden you start getting them to the downside. Going back to the overseas markets, Hong Kong. Hong Kong actually pushed up with some decent volume today. That's 3 days. It's got nice volume, but it couldn't do anything today. Reversed. This one's going to come back into this bar, and I think that, you know, what you're going to see on most of these now is that's the bar it wants to come back into. You got your volume here on this gap. Is most of these are going to come back into this area. They'll probably get their bounce out of there, and then we'll have to see if they can actually do something, whereas, you know, to give us a clue with respect to our markets. So you're probably going to end up with some sort of an ABC structure like that. And of course the key will be is what does it do when it gets back up there, if it does. You know, assuming it can do that. I suspect they can do that, in that, going back one more time, let me say it a different way because I haven't communicated this yet. And I'm going to go to something that's already breaking. Let's take the Russell as a good example. With the Russell breaking down here, assuming the Russell wants to get back into this bar, right? We're only talking 32 from 54. We're talking 20 points. You know, it's not that far. So 20 points here would finish up a move probably into that bar. And what does that do? Well, it takes another 2 to 3 bars. What does that do? And you go back to China. Well, that gives it a chance to retrace back into an area that it should find support, and then it tries to bounce, right? Just while at the same time we're bouncing. These markets are integrated, right? I mean, they don't, yeah, there's divergences between them, just like there's divergences between things inside our market. Sometimes they don't always go the same way, or they don't go the way that they probably should historically, but there's a correlation between these markets, and they do move together to some extent. Just different variations, and sometimes with variances within them, divergences. But they do move as a group. After all, they're all based on the world economy, right? They're all equity-based markets. They're all based on the value of the corporations they represent. So it would make sense that if the general market in the United States suffers, you're probably going to see some suffering elsewhere because they're related. There's trade between them all. So anyway, that's probably obvious, but it's probably worth pointing out as well. Let me look at a couple I didn't get a chance to look at today. Taiwan. Now it looks like it's going to fail up there. Come back again. The Nikkei hasn't been able to do anything. This one's going to sell off tonight. The Nikkei is going to test this low. It's been setting up to do it for a while now. And you can see that it wants to, the way it's trading. So you got a little, a lot of the classical TA is going to call that a wedge, right? And it's actually interesting because this type of a wedge usually breaks to that direction, although, the trend has been this way. But I suspect this one's going to break down and test this big volume low. And that's going to be a big test on it, because if the Nikkei gives up that, I'm going to pull over to weekly. If it gives up that area, right, this big volume bar, that low is 13,995. Your next low is not that far away, 13,748, right? And here you can get into breaking of multiple swing point lows. And you'd already tested the top up there. So, any way you look at it, a break of this bar is not going to be good. All right, that's the main things tonight. So, I got quite a bit of time here. If you have something to go over, I'll go over it. I'm going to look at a few more things. So type in your questions, send me a text. If you don't know where to send it, you can get in touch with me. Just come to TATV, go to the all channels, and there's 3 ways, right? Type in the live stream here, email me, or text. I'll leave that up for you. So let me go look at gold. So support at TA Today, or the text at 912-9110. All right, GLD. Let's see what she's doing. So GLD, yeah, it's coming in that big bar we were looking at. That number was 124.75. Got down to 125.13. Tomorrow's Thursday. Yeah, this is going to be fascinating if it does it. Your retest regen is all the way back here where you're seeing support now. Right? And if I do that ABCD structure, that ABCD structure takes you right back into that area. This has been way more than 6 bars, right, in terms of the distance. So the odds of this holding are extremely high. So when you take and look at it all that way and think about it, it's like, wow, it sure looks to me like it's going to come back into that area, doesn't it? So gold, this price point, 122.51. Let me get this number again, 133.69. That's about $6, right? $6 is about 123, which is right there. Yeah, it looks to me like it's going to come all the way back and test it. And the reason for it is A, you got the ABCD structure. B, you got the momentum going. C, that's the natural place it wants to come back. And D, you've got all these high volume escalation bars on the way back. Right? That usually keeps things going. Let me look at the gold shares. GDX. So they're going to come back too. It's a question of how hard are they coming back? Even harder. Now look at the escalation on this one. You think people aren't getting crushed here? Think again. I mean, that's crushing. Right? Little bounces and just huge crushing bars on the way down. So this one is going to try to get all the way back into these swing point lows now. And there's two of them together. This is an ABCD structure on the way down as well, which takes it right to it. Isn't it amazing how it works out? You'd think that there's, like, you know, some guiding hand or something. 2803, 2516. So that's roughly 3. 3 off of that's roughly 2520. Traded to 20. Oops, not 25. 3 is 2220. Traded to 2320 to 2348. 2220 takes you to those bars, right underneath them. Wow. Okay. We look at the weekly on this. So 2220. Right back to the high volume low. Which is also right here. That actually looks like we're just going to try to get right in there. That area. And given that this has been a big downtrend for a very long time, and we pull the monthly up and look at it too, but given that, to come back this deep, even if it is, even if this thing is turning, in other words, we're getting this rounded bottom kind of thing, even if that's what's happening here, to come back this deep would make sense. And I'm sure you can go back and look at, like, natural gas. We used to talk about it quite a bit. That's exactly what it did, right? It took forever to turn that thing, to try to get it turned. Let me see what the monthly looks like, because the monthly is actually bearish as well. And that is 20, yeah, right there again, 2221, that big wide price spread volume bar. And yeah, that looks to me like where it's trying to go. And it's probably going to be a buy when it gets there. You see how silver looks while I'm here. Even uglier. Silver's going to try to get into that last support zone. Yeah. Let me see what U and G. I haven't looked at this in ages. I guess my buddy quit trading this one. He doesn't ask about it anymore. Okay, so, looking at this and thinking about gold again. When this thing was putting in its bottom, right, we talked about how the rounded bottom would take place, right? That rounded bottom, remember, it came down deep, deep, deep multiple times. And these were big moves, right? Percentage-wise, these are huge moves. And then finally it breaks those swing point highs and actually gets something going to the upside. And, volume escalation, that's all, short covering up there probably, and it's probably got more work to do. But this one's rounding around and slowly turning. And I suspect that's what gold is doing. But it takes a long time, folks. I mean, this high over here is January 2012. We're at, March 2014. That's a 2-year turn. I don't know of anybody that can stick with something 2 years if they're watching it every day. They got to put it somewhere and forget it. Now, if you pull it in, look at it on a 1 year, You can see the kind of escalation that took place. You know, you're drifting back in now, and probably going to have a nice buy here pretty soon. But that's the sort of thing that takes place, right? It takes a long time to change those longer term trends, a very long time. And most people give up on it before that ever happens. So, HYLD, got a question. Let's take a quick look at this. Yeah, so you got a nice escalation here. This is non-adjusted data, so it's a junk bond fund. Please compare junk. What do you think HYLD will do? So you tested the high, 52.67. You got over it, and now you're back in it. Okay, that's on a weekly. And on the daily, okay, so that's not too bad. Let me see on the junk bond right quick. Yeah, it doesn't look nearly as good, does it? I expect what you're going to see is you're going to see these come in some, and then they're going to bounce back up, and then they're going to come in again. They're going to follow the equity markets, just not as wild gyrations as you'll see on the equity markets. So I would think you're going to see the same sort of thing take place here that you've seen on the equity markets. And it's not going to be the first trip down is not going to be that bad. It looks to me like somewhere in here, right? These two bars, this area. Do note though that the real supply demand are way down here, but I think you'll get a bounce out of here first. The only thing I'd note here is you got multiple swing points right down here. So, you know, if it does break these, then yeah, these are going to be targets. Then you'll get those deeper retraces. I think you'll hold up here first, somewhere up here, right? Get your bounce, and then that thing will come back if in fact the markets are going to sell off. The thing, and I'll leave you with this note. The thing is this, is that if you think about the markets, right? And let's assume a top's being put in, and I'm going to go to the ones that are breaking down now. So let's use the Russell. If a top's being put in, and if this thing retraces down to this area, right, you're going to get a bounce. Tops don't happen without bounces, almost never, right? There are bounces because people don't give up on them that quick. So if I pull this to the weekly, for example, you're still, looking pretty bullish here. I mean, it's not that bad. So what happens is this thing comes in, right? You come into the tops of these bars. That's where you bounce from. Then you come back up, and it's always the bounce that you have to look at. Can they get back to new highs? If they can get back to new highs, well, heck, if it's just a small correction. But if they don't, then it gets a lot more serious, right? Because then on the weeklies, you start lining up multiple swing points. And that's when it can get nasty. That's when you can get 10, 15, 20% declines. We're not there yet. We're going to get bounces, right? All that stuff's going to happen. But it's the bounce that you're going to have to measure, right? When you come back on the bounce, can you get over this area will be the key. And if you can't, that's a whole different ball game. Folks, glad you could join me. Tell a friend, tell two, and help us help you. I'm LA. That is and was your Daily TA broadcast. I am off tomorrow night. Of course, I'll be around for subscribers tomorrow and the next day. Check us out with the free trial. You can get the daily updates, everything I do for everybody, available to you at a reasonable price. Free to start with. Just hit this free trial. Have a great night, folks. Thanks for joining me. Take care of yourself. I'll see you next time. Until then, good night.